Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined this week by Jeremy Mullen. And we've got a couple of top stocks picks for you. Zacks #1 ranks in interesting industries. These are the hot ones, the autos and the banks. I'm going to lead off with the auto retailer, Lithia Motors, ticker LAD. And they just reported earnings. That's why they got the Zacks #1 rank. But it's an interesting time for the auto retailers. The demand has been red hot. As we all know, everybody wants a car, new or used. It's hard to find one right now, in fact. And so the new side is struggling a little bit because of the semiconductor shortage, but used cars are on fire. Those used car prices continue to rise. So the auto retailers have been reporting their best year and their best fourth quarter ever, records, and they're seeing records across the board. Now, Lithia has an interesting online business as well called Driveway that they've been seeing doing better than their anticipated forecast, and that is not apparently stealing business away from their brick and mortar retail business, and that's a good thing. So the Driveway is kind of a Carvana competitor. And so that's for buying cars online, and we're just seeing it busy across all metrics. But the analysts are asking, when will this end? Was 2021 peak earnings? Let's dive right in and see what the earnings outlook is looking like. We know the analysts have been raising estimates because of the Zacks #1 rank, the strong buy ranking. But what does it really look like, and what are these shares doing? Let's check it out. So, of course, I go over to Zacks.com to check out those earnings estimates. And you can see here, we're on 2022 now because they reported fourth quarter and full 2021. So they made $40.03 last year. That was the all-time record. Now, going into that earnings report, the analysts were a little bearish and pessimistic on 2022. It was always going to see an earnings decline here. But interestingly, and I thought this might happen, Lithia isn't as bearish. And so whatever they said on the conference call wasn't quite as bearish. So some of the analysts, two of them down here, have had a raise since that earnings call. And after they got more info and more guidance about what 2022 is going to look like, two of them have raised. That's why we're getting the Zacks #1 rank. Because if you scroll down a little bit more, you'll see they were looking for 37.45 going into that earnings report, and now they've raised it to 38.34. That's still under the 40%, so it's still a decline of 4%, but it's not as big of a decline as going into that earnings report. So a little bit of value trappiness here, even with the earnings estimates being raised. A little bit of worry still about peak earnings and that it can't get any better than 2021. And maybe that will be true, but these shares are still cheap here, trading at just 8 times. Let's look and see what these earnings look like on the chart. So this is what I love, the price and consensus chart on Zacks.com, because this kind of lays it out for you visually. So we're seeing 2021 here. This was the peak here, which has already been locked in. We know this was $40. Here's 2022, and it's always been over the last several months below 2021 because the analysts were a little pessimistic that it could not reach a new peak earnings. But we're seeing a little bit more bullishness here with the recent raises after that earnings report, but still just a 4% earnings decline. Now, 2023, heading into that report, they were real pessimistic on, but after hearing what the company said and seeing guidance for 2022, they've turned that around too. And you can see that they're now expecting 2023 to be a bit better as well. But look at these shares and what's going on with the shares. So these peaked way back here in March of 2021, already starting to get worried about peak earnings and how can demand continue to be this strong. So the shares have actually been, declining here They're now down 16% or 17% over the last 6 months as a result. That's why we still have the cheap PE of 8 times, because basically the street is saying all of this is priced in. We know peak earnings were 2021. There's not a lot of catalysts for 22 or 23 that we can see so far. It's still a good story. The company's still making, big earnings, almost close to the record, but not quite anything that's going to catalyze here to push it higher after all the demand we've seen during the pandemic. So we're not really going to be in these shares, and that's kind of what's happening. But I still like the auto retailers, and I think the street is a little too pessimistic on what is happening. I know in my situation, I'm still out there looking for cars, and there's still the chip shortage, and I can't get one. So there's still a lot of demand, and we could see, if these shares get cheaper, a real buying opportunity in a lot of these auto retailers. If I can get it down at like 5 times or something, then yeah, I might be interested. So on further stock market weakness overall, these are the types of companies I'm going to be looking at. It does pay a dividend, but it's pretty small, yielding just 4.44%. So almost 0.5%, a 0.5% here, but at least you're getting something for your patience. But I'm really looking for Lithia on a further pullback here, further weakness, then it might get real juicy for me as a value investor. Now I'm going to throw it over to Jeremy with his Zacks #1 bank stock, and for you to find out what's going on with the banks here in 2022.
Thanks, Tracy, and hello, everyone. I'm Jeremy Mullen here today with my top stock pick. Today I will be doing Cincinnati-based company Fifth Third Bancorp, ticker symbol FITB. While Bengal fans might be hurting this morning after that loss to the Rams, this hometown bank is looking pretty good. The stock is a Zacks ranked #2 buy that is a diversified financial services company. Fifth Third offers commercial banking, branch banking, consumer lending, and wealth management. The bank has over $200 billion in assets and operates 1,100 full-service centers and has over 2,300 Fifth Third ATMs. The company is prominent in the Midwest but can also be found in some southeastern states. Unlike most stocks over the last few months, this stock has held up pretty well. Strong earnings and rising rates are helping the financial sector, so this stock is looking like a good place to hide while the market continues to struggle. Okay, let's go to the profile page, look at some earnings, some estimates, and then get to the chart. Okay, in late January, Fifth Third reported a 2.2% EPS beat, which you can see here on the chart. Revenues came in just below expectations, but the company saw strong business momentum as well as improved and more diversified revenues. They saw record commercial banking and wealth management revenue and see positive momentum to carry forward into 2022. The company guided fiscal year 2022 loans and leases up 5 to 6% year over year and sees non-interest income up 3 to 5% for the year. The company's roots go way back to the Bank of Ohio Valley in Cincinnati in 1858. Since then, the bank has grown to a regional powerhouse with more than 19,000 employees. Now, looking at the market cap, we can see $33 billion in market cap here, as Zacks style scores of C in value and momentum and D in growth. Other things to look at are the PE here, 14, and then we also get a dividend of almost 2.5%. Looking at estimates, we see for the current quarter, we do see some estimates being taken down, but more focused on the latter half of the year, we see estimates going higher. And even next year, we see a rise of about 5% higher. So as interest rates go higher, we're going to see this bank become more profitable, and that's why the stock is having such positive price action. So let's look at that chart. Okay, I wanted to show this chart going all the way back to before the financial crisis. As you can see, the bank was doing fine, and then, like most banks, they got in trouble with over leveraging and subprime and simply fell apart into the financial crisis, hitting a low of $1 a share. So it was a slow crawl back throughout the last decade, and things were looking good, and then we had the COVID crash, but we had a fast snapback, and now we're sitting here at all-time highs. So it's been a kind of crazy last 15 years for the bank, but things are progressing, and now with rates heading higher, we are sitting next to all-time highs. So that's pretty good sign right there. Let's zoom in and kind of see what's going on. Since the start of this year, the stock is higher. So a lot of stocks are really struggling out there, but Fifth Third is doing pretty good. Technically speaking, we're above the 200-day, the 50-day, and the 21-day. 21-day is momentum, so that's very it's nice to see in a market like this where we're seeing a lot of selling that we're above that 21-day. So short-term versus long-term, I got a short-term trade for you guys that just want a quick kind of play here. From highs to lows, we have a Fibonacci retracement that has been broken, so the bulls are in control of this. And I would look for price targets of 55.5 there. Now this is a bank, so it doesn't move fast, but we could see a grind into summer up to this area. So if you're looking to have a 3 to 6 month window or something like that, this might be a good trade to take against this 50-day moving average. Longer term, if the market does have an overall like a big pullback, we could see some pressure lower. And last time, you can see the 200-day held perfectly. So you guys that are looking for a value play in the financial sector, this 42 level or this 200-day average, wherever it may be at the time, this is where you will look. Okay, I really like this stock as a place to hide with the current volatility. Obviously, it going up with the market going down is a positive sign. So if you guys are getting hit, perhaps look for a stock like Fifth Third to hide in. Okay, that's it for me and Tracy and our top stock picks. If you like what you heard today, go to zacks.com/promo to check out our current promotions. Thanks and have a great day.